Hey everybody, welcome to the stream. My hair is looking a bit disheveled tonight. How's everybody doing? It's that time, Thursday evening in the UK. If you're in the USA, it's Thursday afternoon. I think I might be a little high. Hold on. There we go. How is everybody doing today? Thank you for joining me. It is a weekly live stream where we talk about everything finance related, peer-to-peer lending, stock market, Bitcoin, particularly focusing on peer-to-peer lending as we do every week. So if you're watching this live, welcome. Thank you for joining. If you're watching this in the future, come join us every Thursday evening, except the 29th of October. I'm not going to be live streaming because I am going on holiday for a few days. So put that in your calendars, the 29th of October. There will be no live stream that week, but I think I'll probably just wait till the next Thursday to do it because I'm going to be gone for about 5 days. So put that in your calendar again. But otherwise, glad to see everybody here. Please hit that thumbs up button if you can. That helps me out with the recommendations on YouTube. Rocking the official Grimsby Town football shirt edition, probably I'm saying probably in the 1990s, this one with the old Food Town sponsorship. And Lotto brand, Harry the Haddock representing. Say I'm not really a football fan, but I do like this shirt, so I thought I would put it on today. So what are we talking about this week? Well, we've got a little bit of Assetz Capital news, some funding secure bits, rate setter. Are we doing any rate setter? I don't know. I didn't actually get the rate setter statistics this week because I forgot. But we'll talk about funding circle, lending works, Wellesley Co, the big situation they have going on over there. And even if you're not an investor in Wellesley Co, you definitely good to pay attention to what's going on with them because it can affect, if you have peer-to-peer lending or other investments in that type of sector, you want to know, the types of things that can happen to these businesses that are not run correctly and run into financial difficulties. So we got some Wellesley Co news. We got property partner outlook. For those of you that have property partner shares, there was a report outlook this week. Some Zopa news. And what else? A couple of bits and pieces on interest rates. It's been kind of a quiet week, though. There's not too much going on within peer-to-peer. Aside those big announcements. Wonder if let's see what else is on my news. There was an interesting report by study commissioned by Barclay's Plan and Invest about investing and why people don't. So I'll talk a little bit about that. Yeah, and if you have questions, as always, put them in the chat comments and ask away. I will answer anything I can for you, as always. So, as always, we'll say a quick hello to everybody who took valuable time out of your day or evening to come and join me and listening to me natter on. Oh, yes, I know I said this week things were going to look a little different on the stream. I didn't quite get my head around how the tech side of that works, but today I almost got it finished and it's ready to test, but I didn't want this to be the time that I tested it in case something went wrong. So next week, everything will look different, and hopefully we'll have a special guest for you next week. I know sometimes my times get delayed a little bit. You can understand this streaming stuff is a finely tuned machine, and if you get it wrong during the stream, it's impossible to stop the stream and then re-enter it. It creates all kinds of trouble. So I have to test it out and make sure that it's correct before I go ahead and put it live for you so I don't cock it up, because I have been known to cock up a few streams if you've watched the streams before. And I'm pleased to announce I do have a battery backup now in case the power goes out and we have a power cut, but hopefully again that won't happen. So thank you to everybody that suggested the power battery backup. I hope it works. Hopefully we won't. Let's think positively. No power cuts. I'm drinking the green tea matcha today. Very good for your system. So anyway, let's get to it. Hi, Aki Chap in Accrington, #1 on the stream today. Very, very good. A t-shirt. Yes, I'll have to remember to send you a t-shirt. I don't have them yet, but I will. And then maybe, just maybe, I'll start sending t-shirts out randomly. Yeah, I think we need to do that, especially for the person that's first. Aki Chap, you did well. ES, you're second in Portugal. Welcome. Stephen in Southport. We got Paul. Nice to see you, Paul. John Day. Yes, I did talk about Tech Kit this week. Unfortunately, it has not come to fruition, but next week it will. Colin in the Peak District. Hello, Peter in Leatherhead. Keith in lovely Lincoln, home of the Lincoln Cathedral. Patty Gilfillan from France. You still out there on holiday, Patty, or are you? Did you decide to move over there? Bonjour. Comment ça va? Dave in Stoke, Mr. Double D, Dave Dawson. Arthur Atchison, double A. We got double D, double A. Nice to see Arthur. Norman in Sussex, battening down in preparation for Storm Alex. Yeah. Well, you can always tie yourself to a tree, if things get too bad. Tie the dog too. Paul in Portsmouth. Hi, Mart in Leeds United. Very nice. Very nice to see you, Martin. Agam B, nice to see you, Agam. Hi, Mike Powell. You were distracted by reading the peer-to-peer finance Power 50 bizarre list. Okay, I don't know what that is, but I'm sure it sounds really funny. If it has the word bizarre in it, must be good. Nice to see you, Mike. Mike, of course, from our Lendy Action Group representative here. If you haven't joined it, I'm going to put the link up as I do every week, because you need to get your bum over there and join that Lendy Action Group. If you have money in Lendy. That wasn't the link. Well, let me try again. It's close. I got one of the characters right. Copy and paste, fail. Rip on the copy and paste. There we go. Lendy Action Group. Join that. And who else we have? Paul Stitson. Good evening to you. I always want to say Paul Stilson for some reason. I don't know if it's something to do with the cheese, but Paul Stitson. Steve Manton in Solihull near Birmingham. Tony in Somerset. And Scott Peacock over in Norway at the present. Nice to see you. What are you doing over there, Scott? Hopefully you're visiting the fjords in Norway. I've never been there, but I've wanted to go to Norway. I heard it's a very expensive country. But yeah, please hit that thumbs up again. We're going to get started. If anybody else has questions, you want to put a comment in the stream, please do that. So we'll do our little Loanpad update. Loanpad, again, just seems to continue to be the slow and steady peer-to-peer lending investment choice for me. I do have this little crazy side of me that wants to dump all of my savings into Loanpad because it seems to be working, but I have to think back to more intelligent thoughts that whenever I've done that in the past, it hasn't worked out very well. So I'm going to continue to stay steady in Loanpad. I noticed that their loan book did decrease a little bit this week to 12.5 million, secured on 38.9 million pounds of loans. We got an average loan to value of just 32%, which still is very low. It's a good sign. I think they were about 13 million on their loan book last week, so dropped about 600,000. Still same amount of loans though, which is interesting. 30 loans this week, 1 default, 3 extended loans, and 1 overdue loan. And 2 loans are being serviced by the interest coverage fund, which is Loanpad's provision fund. About £15,400 that's been paid out of that provision fund to service the interest on those 2 loans, we have a drop in the average loan size to £418,000. I think it was about 432 last week. So anyway, in summary, everything seems all good over there at Loanpad. Loanpad, if you're watching, Louis, keep up the good work. It's nice to see that you're a bright spark in the peer-to-peer lending world. And if you want to open an account, you don't have a Loanpad account, which, it's a good company I like it, in my opinion. You can go to my cashback page on the Financial Thing website and get yourself some cash back and support the website too at the same time. I always forget to do this. I need to do the disclaimer. I have it on a Word doc and I need to just move it to the top. I always forget to do the disclaimer, but basically this information is not financial advice and has been prepared without taking your objectives, financial situations, or needs into account. As you consider its appropriateness for your circumstances, all investing carries a risk. Opinions expressed in this stream are opinions based on my own personal experiences. The FSCS does not cover peer-to-peer lending, and your capital is at risk. Please don't invest more than you can afford to lose, and always remember to diversify your investments. Don't put all of your eggs into the peer-to-peer lending basket or any other investment form. It can be very risky. So disclaimer over. So Assetz Capital, I checked the discounts this morning. They were ranging from about 7 to 7.5%. So if you want to pick up some loans on discount, you can over there. It's still those discounts, I don't expect them to really change. I think they're going to remain high probably till the end of the year, especially with what's going on with COVID now. You're going to see more lack of confidence by investors. You've got this kind of second wave going on in the UK. So I expect that if you want to be able to exit out of the QAA, what the hell? I can't even remember what that's called. The quick access account, that you are going to have to take a haircut of probably between, say, 7 to 8.5, 9%. Personally, I'm hanging tight in there. See what happens with assets. I think everything looks okay right now. They're continuing to lend. They're doing this CBILS lending, and they wrote a new loan I think about a week and a half ago, which is over £1 million in their manual lending account. I didn't look at it because I'm at the not investing time right now. I'm just, withdrawing interest, staying in the loans I'm in. And then when I have some more capital, I'll probably look at those new loans that come out. But right now, just interest withdrawing rather than reinvesting. We also, with Assetz, we got the announcement this week that they're going to continue to have their management fee of 0.9% for the year to remain until the end of the year. I don't know how I feel about that. I think, I'll give them another 3 months of grace on the 0.9% management fee. It is what it is at the moment. We're in tough financial times, and obviously we want Assetz Capital to continue to be able to pay their employees and make profit. But at the same time, investors are getting a little bit hurt by that. They're obviously receiving a reduction of 0.9% over a period of a year. So, not the best news, but I was also reading the forum about Assetz Capital, and some people were complaining a little bit about the, I think it was a case of they were trying to get an interest rate, or Assetz had bumped up an interest rate on a loan because maybe the lender was in trouble. So I don't really remember what the story was, but I posted on the forum that as far as I'm concerned, I don't care about an interest rate bump right now on anything, because I'm happy to get what I get. And mainly, what you want to be looking at as a peer-to-peer lender right now is, are you getting your capital back, and how secure is your capital? The difference between 4% and 5% is very, very negligible, unless you're, talking on a huge amount of money, which, I don't have millions invested in peer-to-peer lending. But judging by what's happened with the rest of the companies, that have run into trouble, I just want to see capital protection at the moment. So I'm not too concerned about interest rate bumps. That's why I'm happy to be where I am. They're saying that with this 0.9% annual fee, they're waiting to see how the CBI ILS lending goes, which they'll know in December. I don't know. That seems a bit like a bit of corporate rhetoric. Does your business depend on the CBI ILS lending, and whether that annual management fee has to stay in place? I'm not convinced, but we'll see. Two, if you're an investor in Assetz Capital, you might have invested in a few of these wind turbine loans, which ran into trouble. Basically, these big wind turbines were on industrial land, and there were several of them. I invested in a couple, I think maybe about 3 or 4 of them. I made those investments when I was very, very early on my peer-to-peer lending, and I don't think I knew much of what I was doing when it came to industrial land. But when those projects ran into trouble, it was very apparent that the default recoveries were not going to be very good. Fortunately, Assetz Capital had quite a lot of money in their provision fund, and they were able to cover some of those payments. But now they've figured out that they can't continue to do that because they don't have enough money in their provision fund to pad payments for that defaulted loan. And now they're taking legal claims. I'm not going to talk too much about it because it is, sensitive information, but this is the kind of thing that Assetz does when a loan goes into default. They're not afraid to hire a legal team and to go after borrowers in situations, or even if it's mistakes in valuations or mistakes in somebody who sells them something that's inappropriate. They go after them, and I like that kind of action. Of course, you just have to expect that there are going to be defaults in a company like Assetz Capital because you are doing SME lending, and it's just part of the nature of the game. If you want to get returns, you have to take a risk, and SME can be quite risky. But that's the type of thing that Assetz is doing to go after borrowers that the default, or people they think have made a mistake. Let's see, I got a repayment from Funding Secure, which I was pretty happy about. I think I got let's see, 10%. I got about 15% of my 15% loss of capital on a project that went into administration. So at this point, obviously 15% loss of capital is not a great outcome, but it's a hell of a lot better than what we're seeing over at Lendy, where you might see a 50% loss of capital or more. And my eyes went to this comment that Martin wrote about a joke bondage site. So I'm just going to have to focus. But yeah, so Funding Secure, again, repaid a loan about 15% loss of capital, which, for a company that's in administration is not a terrible result. Yeah, better than what we're seeing at the cat poo that is Lendy recovery. So yeah, when I get paid something back like that, it almost kind of makes me a little bit happy because I'm just so used to the bad news that we've been receiving from some of these companies that are in administration. So, obviously every loan is going to vary what the recovery amounts are, but that one, if you're an investor, you probably know what it was. I'm not going to really talk about what it was, but it was a property development project up in the north. So let's see what else. Funding Circle I noticed the share price has gone up quite a bit since last week. I think from 65 pounds to 83. If you have shares and you held on to them, there you go. You made a bit of money back. They released some information about their projected returns for groups of loans from over the periods of years, which you can see as time has gone on with Funding Circle, those returns have really sort of gone from here and just kept on diving down and down and down. If you're a Funding Circle investor, that's not really good news. That's not what you want to see, especially with the COVID situation. I think that Funding Circle has a bit of a problem on their hands with what's going on over there with their loan performances. So they released numbers, projected returns for the 2014 loans are expected to come in at 7 to 7.1%. 2015 loans predicted to come in at 6.9%. And this is where you see the big drop. 2016, 4.3% to 4.6%. 2017, 2.3 to 2.8%. 2018, 0.9 to 1.9%. That's bad. And 2019, 1.2 to 2.7%. And 2020, 2.2 to 4%. I don't know that I would pay too much attention to those 2020 loan numbers because I don't know how they can even project that with what's going on with the country and the economy. But definitely not very encouraging numbers from 2016. No, so let's say 2017 onwards. One of the reasons I am happy to be out of Funding Circle. I just personally wouldn't want money in there right now. I hope everybody that's in the exit queue does get a chance to be gone of that. I don't really see that improving too in the future. There's better places I think you could put your money to work. That's the Funding Circle. A bit of a rain cloud. I'm just looking. Sorry if I keep moving my head. I've got this light tripod sort of hanging over my monitor. And I was just trying to look at the time. I'm trying not to go over. I'm trying to keep it under an hour this week. I think we're going to get it done. So if you want to place bets on that, definitely do that. I think you'll win on that one this week. But again, hit that thumbs up. We got 21 likes today. Let's see if we can get that up to 30. I appreciate that. What else do we have? LendingWorks announced, if you're a LendingWorks investor, that they will continue their pause on investing for another 90 days, possibly ending sooner. I was a bit disappointed with that. I thought that with the takeover of the, with this investment fund that went in and bought them out, that they would kind of give them the go-ahead to continue operations. So I'm really curious to why that's happening, aside of obviously they are probably not sure how their loan book is performing. They'll have numbers at the end of October on that. But you're going to have to probably wait till the end of the year to see any type of movement on the LendingWorks situation. So, again, it is what it is. Things are just weird right now in the investing peer-to-peer field. So didn't get very good news on LendingWorks, but they are continuing to pay back. If you check your account, if you haven't in a while, you probably got some interest capital payments that have been repaid. So as long as they're repaying, that's good. So let's talk about the dark horse in the room this week, Wellesley Co, Mr. Graham. They had a creditors vote and decided that they are going to release their FCA regulation and operate as an unregulated entity from now on and contracting their business. Their business is going to become very much smaller. And they will focus on institutional funding and close their doors to retail, peer-to-peer, and bond investors. Not surprised on that front. Kind of figured they would shut down their retail side because they obviously are having some troubles behind closed doors. If you want to read what that means for you as a investor, go to my website, financialthing.com. I've updated on the front page. You'll see the Wellesley Co review. It's right there. I'll put a link. If you are wondering as an investor what's going to happen to your money, I write about it. Unfortunately, I don't think you're going to have good news on that front because they've released some what started out as a news story with a positive twist to it. The news story was Wellesley outlines financial benefits of a company voluntary arrangement. So that's a CVA. That's what the creditors are voting on right now. So basically, it's a restructuring of the company, and what that restructuring will do is figure out how much they can pay back investors. And it's a turn that they are trying to take rather than going into administration. So, yeah, hopefully the creditors will vote on that, because a creditor that would want to put a company into administration would be kind of a strange turn. It does happen. I actually did it myself about 10 years ago. It turned out to be a bit of an error. Obviously, some of these other companies, we don't really know what's going on behind their closed doors, but the creditors are going to vote. So what that means to you if you're an investor, now, if you're not an investor in Wellesley, there used to be a peer-to-peer lending company lending out on bridging and property development loans. They're actually quite good. I like them. I was with them for about 6 months back in 2015. And what they did was introduce mini bonds and started really focusing on that. And the mini bond return rates were pretty low. Once they really started focusing on the mini bonds, I pulled the exit cord and I was gone at the end of 2015 and never went back in. And it was exactly what I thought, was going to happen. When you invest in a mini bond that's unsecured, you are basically loaning money to the company that's issuing the mini bond, and the company could do whatever they want with that as far as grow, using it to grow for their company, which what Wellesley did. They used that money to try to grow, and they also used it to lend out to other borrowers. So what they're saying now is that investors in Wellesley's mini bonds are now being offered an alternative equity option, which they can subscribe for shares in the company instead of receiving a proposed cash payment. So basically, you are taking a loss on your investment, and on top of that, Wellesley is going to give you shares in that beautiful company. Would I ever do that? Absolutely not. I wouldn't want to be a shareholder in Wellesley. They aren't making any money, and they haven't for a while. In fact, they lost about £10 million in 2018. So why would I want to be a shareholder in a company that was operating so badly in the red and now is having difficulties like this? But if this proposal goes through, what's going to happen is Wellesley's first unsecured mini bond investors, those are the unsecured ones that were launched in 2014, they're going to receive 58 pence on the pound if you take the cash, and 73p on the pound if you take the shares. So what that means is you don't cash out. They're going to give you equity in the form of shares, which would be the equivalent to 73p on the pound. If you do want to cash out, you're going to, under this proposal, take a haircut of 42p on each of your pound invested. They are estimating that if the company goes into administration, the first unsecured mini bond investors would only receive about 48p on the pound in cash. So 10p better off, not really much. See, it's an assets-backed mini bond investors. Those are the bonds that were secured by property, different type of bond, not the unsecured one, but the asset-backed ones. Those are the projects that were launched in 2019 onwards. The investors could receive up to 71 pence in the pound on a cash basis, or 89 pence on the pound if they take the equity, compared with 77p under administration. And peer-to-peer investors, unfortunately, you get the worst end of the deal, receiving 48p on the pound from the cash out, or 44p if it goes into administration. Yeah, it's just another case of bad management of a company that has not done well, and now they're trying to continue on with their business. I never want to see a business fail, absolutely not. But my always first thought is for investors, and there's a possibility that you can use some of that loss on your taxes. You'd have to obviously read the HRMC rules on how you can do that. But I don't think I would want equity shares in Wellesley, so I'd probably have to consider just exiting out for the cash payment. Depends how much faith you have in Wellesley Co. So unfortunate, again, very sad, but it is what it is. Let's see what else. Yeah, if you have any comments about you're a Wellesley investor, put the comments in the stream. I'll go through them when I'm done with all of this finance stuff that we're going through. So let's talk a little bit about Ablrate. I've had quite a lot of readers, asking me what I think about Ablrate. And Ablrate is really the last frontier of high risk, high interest investing in the peer-to-peer world. We've seen the other companies fall by the wayside and not survive, and Ablrate is the one that seems to be continuing forward. Personally, I don't have a very big investment. Just my risk appetite now in peer-to-peer is much lower than it was 5 years ago when I started with Ablrate in 2015. But I continue to hold loans in there, and I went through my loan book today, and I was kind of looking at how many payments were late, how many were made on time, how many were late, and how many were unpaid. So I just wanted to give you a few statistics on if you were thinking about investing through Ablrate or another high interest rate company like that. It's offering, 12, 15%, 8% loans. And so I've had 555 total loan payments over the period of my loan book of 5 years. It equates to right now 16 loans that are live that I have on the platform. 4 of those loans have defaulted. And what I consider late, there's 2 categories to late. There's ones that are 1 or 2 days late, so I don't really consider them to be late. That sometimes the platform just puts them up maybe it's on the weekend, they put them up a couple of days late. Not necessarily the borrower. Sometimes it's the borrower paying a day late. But I consider those to be in good standing. And then we have the loans payments that are made 3+ days, or that I consider to be possibly in trouble. And I'll give you the statistics. It's quite interesting. So out of 555 total payments on 16 loans, 77.12% were made on time in the green zone, what I call it, is 428 payments. 24 payments were made late, 3 days plus. That's only 4.3% of the payments. And then the non-payments, which I would consider the loans that are in default, the 4 loans, 17.84% of my total payments were non-payments, and in the red, which resulted in default. So that was equaling 99 payments out of the 555. That seems about what I would expect from a platform like Ablrate. Unfortunately, the types of securities that you're lending at in a company like Ablrate can be quite risky. I have a loan that's was made in 2016 that 4 good payments, 2 late, and then went into default. So we're now 48 payments late, or unpaid. Sorry, let me correct that. That's 4 years. So this thing has really been dragging on. There's obviously some case of fraud going on there, possibly. But again, that's the risk that you take when you're lending into high-risk peer-to-peer lending. You're going to have situations like that. Not only in Ablrate, but other companies like Assetz has had borrowers that have skipped the country and disappeared. Assetz really doesn't have much control over that. They can do their best to try to loan money to people they think are legitimate, but at the end of the day, if somebody's going to get a loan and then run off with it, they can. There's nothing to stop anybody doing that. But yeah, those numbers were pretty, I thought, pretty expected of what Ablrate offers for their product. Again, I'm not just not the type of person that can shove too much cash into a company like that. But David, who's the CEO of Ablrate, has agreed to come on the stream and talk to us about peer-to-peer lending and what's going on. So that'll be interesting. I'm going to try to set that up in the next couple of weeks to get David from Ablrate on here so you can ask him some questions and we could just chat about peer-to-peer lending. So Property Partner had a report this week. If you're not an investor with Property Partner, what that is a company that sells shares in pretty large projects. They do things like student accommodations, or they'll buy a building with multiple units in it, 20, 30, 40 flats, rent them out, pay the shareholders a dividend. That's what they used to do. They haven't for a while because of COVID. So we got a report this week that 11 properties are now recommencing dividend payments. It's been a while since we've seen any dividend payments. As an investor, dividends are ranging from 2% to 5% net. That's after Property Partners management fee of 1.2%, or if your account's over £25,000, they reduce that management fee to 0.7%. The rest of the properties are not paying dividends. What they said is, whilst property dividends remain suspended, all net rental income for each property accumulates within that property's account, strengthening its financial position. We will only declare a dividend once a property has reached a strong enough financial position to be resilient to the ongoing crisis. Now, what that means to you, if you're a shareholder in one of these properties that's not paying a dividend, rental payments are going into a fund, and when for instance, if the property is vacant or there are expenses on that property, that fund is used to pay out to support that property to keep it in good standing. A lot of Property Partners investments are mortgaged. I think usually 50% leverage. So there has to be a mortgage payment that's made every month. Otherwise, the property's going to get taken by the bank. This is one of the cons that when I did my Property Partner review that I wrote, was because the property is leveraged, you do have more significant risk there. If something goes wrong with the property and the payments are not made for some reason, it could go defaulted back to the bank. So Property Partner seems to be handling that as well as they can. They have student accommodations too, which are obviously going to struggle right now because students are just starting to go back to university, but we have a low occupation on those, ranging 27% up to 100%, but averaging about 62% occupation. It's probably hard to make a profit on buildings when they're not occupied highly. And Property Partner said at the start of the crisis, the portfolio as a whole was in deficit. That means there wasn't enough money coming in to support the expenses of the property, of the portfolio of properties. And despite weaker operating performance over that period, the dividend suspension and mortgage interest holidays have resulted in the portfolio moving into a surplus. So that's good news. They've been able to reverse the surplus and reverse the deficit into a surplus on the fund. And what they have is this overall SPV central fund where the dividend suspension payments have gone into the central fund, and that central fund is used to pay out expenses on properties that need it. So they said the SPV central fund continues to be a source of financial stability for the portfolio, providing additional funding to any property that needs it. Where unexpected costs or voids arise, things like vacancies, individual properties are able to borrow interest-free from the central fund to cover the shortfall. Clients are never asked to contribute to funding shortages on their property holdings. And the 30th of October, there will be an actual providing of financial results for all the properties. That's something that's really been missing. There hasn't been much financial transparency on the individual properties, but they're going to have a report that comes out on the 30th of October now. And in addition to the release of the net cash surplus deficit information on every property, the 30th of October, they will make an interim announcement reporting financial results for every property. So that will be complete financials, not just the deficit and surplus, which if you're an investor and you own shares in that, you can log on and look at the surplus or deficit for each property that's up there now. The financial results will include rental income, property operating costs, capital works, mortgage interest costs, fees paid to property partner, dividends, etc. The results will give a complete picture of every property's net income, and thereafter will be updated every 6 months. That's really good news. I mean, we need that as investors. We want a full picture of every property. And what Property Partner does is has 5-year anniversaries on every property where the shareholders get to decide whether they're going to sell the property or hold it. And one of the ones that I own came up for vote. They've started again today on October the 1st, 2020, doing those votes because they've been suspended. Yeah, they offered us the option to sell or to hold. So that will continue to happen now. You're going to see a backlog of these votes because it's been suspended for so long, but some movement forward there with Property Partner. Well done to them. Zopa announced they're going to be dropping rates by 0.3% from October the 2nd, and they'll be reducing target returns for newly invested money in both Zopa Core and Zopa Plus. Core average target rate 3.2%, and the Zopa Plus target rate 3.7%. Zopa Plus projected rate 2.1 to 5.3%, and the Zopa Core projected rate 2.0 to 4.0. So more rate drops from Zopa. Had a email from Marcus Bank this week that they're going to drop their interest rate from 1.05% to 0.7%. Again, not surprised. I could expect those will continue to fall as interest rates stay in the poo-poo toilet. And let's talk about this study of Barclay's Commission Plan and Invest in partnership with researchers at UCL revealed that financial concerns present the biggest challenges for consumers today. Purchasing a property was cited as the most difficult choice. 32% of respondents said they were concerned about purchasing a property, and then followed by how to invest, 25%, and how to spend your savings. So 25% of the people polled are having difficulty knowing what to invest in. But apparently, as our friend Chica Boy said, women are doing better at it than men. It said over the 3 years, the annual return on investments for men was an average, a marginal 0.14% above the performance of the FTSE 100. Well, for women, it was 1.94% higher. So women are 1.8% better at investing. They get 1.8% better returns, at least due to these people polled, than us men do. It said, our research has revealed that we are consistently bombarded with choice, creating a decision fatigue. And also it said women tend to go with their gut when investing. So good job to our female friends. Again, another perfect example of why stock picking is very hard. As you see, our men friends only beat the FTSE by 0.14% on average. I would imagine there will be quite a good percentage of those people who have done worse and some who have done better. That's an average. So you'd have been better off just putting it in a tracker and stop wasting your time. Again, I don't really like the FTSE tracker, but if you're going to be stuck on investing in UK companies, if you're an average guy that doesn't know anything about investing, trying to stock pick, very, very difficult. But I thought that was an interesting article. On a side of stock picking, I've been recording the video about my Trading 212 account and me delving into the risky business of trying to build a stock portfolio of winners based on an advising company called Motley Fool, and also some stock tips off a very knowledgeable friend of mine and some that I picked out myself. And the fund has actually been doing pretty good. Again, I don't expect long-term results to be much better than my tracker fund unless I get very, very lucky. But I think it was up about 7% over a week, which is ridiculous. Pure, I think, a lot of good luck. I just happened to buy in a dip when the markets went down last week. But I'll be posting a video on Trading 212, my account, what I bought, and also how to use Trading 212's investment pies that they've created now, and how you can move existing investments into the pies. You didn't used to be able to do that. So I'm going to put up a tutorial on Trading 212. I like this, the app. I think it's pretty cool. And oh, I lost my light there. So yeah, Trading 212 so far so good. And that, let me go ahead and read what you've got to say in the chat comments. Again, please hit the like button if you're enjoying the stream. I'm losing my light today. I obviously forgot to charge it, so you'll have to have a dim view of me for the rest of the stream. I thought for a second the power went out. I was like, oh God, no. But yeah, please hit that thumbs up and let me know what you think about everything that we're talking about this week. Let's see here. Dave says he loves the daily interest on Loanpad. It's illogical, but it still feels good to see the money go up every day. I think, yeah, that's a really good point, Dave. A lot of that is just purely psychological. It's a great marketing ploy by Loanpad, but it's nice to be able to see that you're getting paid every day. I like it. It's the only company right now that's doing it. Mike Powell said his top 50 report was bizarre, as in some of the people on it. Head of Wellesley's Andrew Turnbull oversees this well-known alternative property lender, which goes from strength to strength. That is very bizarre, considering what's going on. I wonder when the report was written. Paul Stitz, it says, looks like we should be putting more into Loanpad. Yeah, I don't make recommendations. I just report it like it is, but I like Loanpad so far. Hi, Cheeky Boy. Welcome to the stream in Folkestone. Late for school today. Yes, you are very late. You have to go sit in the corner and have a timeout. No ice cream for you. Patty says, last post was sounded on RateSetter's 5-year account for me today. I cashed out. My Access account still left at around the £20,000 mark. Yeah, Access account still moving slowly. I got last week, so I don't have a counter anymore, but I've been looking on the forum and seeing this. It's still moving pretty slowly. Thank you for doing the thumbs up, Mr. Chicken Boy. Appreciate that. It's nice to see. I always get a kick out of reading your comments. David Dawson says, how long does it take to get money withdrawn from Unbolted normally? I think, I haven't withdrawn anything from there for a while, but I think it takes a couple of days. Last time, how long has it been since I did? I don't know. I think it was a couple of days. It wasn't long. Mike says the funding circle share price is pence, not pounds. Yeah, you got me again, Mike. You're right. I get that confused sometimes. I say it in pounds, sometimes I say it in pence. So 83p. 83p. 83.5. How much is it now? Let's have a look. I think it's 83.5. Oh, 81 now. 81.1. So it's a 52-week low is 21.95. That's a big drop. That's correct. I don't remember it going down to 21.95, but I thought the lowest I saw it go was about 44. Let's see. Oh, it did. It went down to 25. Yeah. I see, March 18th, 25p. So, yeah, not good on the funding circle share amount. Chica Boy says he notices it's mostly men who make most types of investments. Most women don't seem to have any money to invest. Why do you think that is? I have done research on this topic. I don't think that that's true, Chica Boy. I'm sure that there's plenty of women that have money to invest. They probably do it through work, maybe financial advisors, or married women. Maybe they let their husbands do it. I don't know. Patty says, I'm puzzled about your positive mention of Bitcoin. You rate it. Do I rate it? I do, Patty. I think. Well, let me first say that I think Bitcoin is a bit of a boom or bust situation that, from my research, could possibly go into the millions, but could also just fizzle out into nothing. I don't know. But I think to shove a bit of money into Bitcoin for 10 years or, is not a bad play, because the risk to reward is pretty good. I mean, you have I think a pretty high potential for a reward, possibly up to, $1 million, $10 million per Bitcoin, maybe 100,000 per Bitcoin. So to put in, let's say you shoved 1,000 pounds in Bitcoin just to see what happened. If you goes up to 100 grand, you made yourself 90K for 1,000. Let me get my numbers right here. You would make 10 times. So you make 10 grand on 1,000 pounds, goes up to $1 million, 100 grand, 10 million. You'd be doing really well. So for a pretty low shot at something like that, I don't think it's a bad thing. You are talking about a very long-term play. I wouldn't advise trying to trade it or buy and sell it, but I got some Bitcoin that I just will forget about and see what happens in 10 years. But I think if the blockchain does have a lot of potential, Bitcoin is sort of like the Colgate brand of cryptocurrency. So they got the branding behind it. We'll see what happens in the future. No guarantees, of course. But yes, I do think that Bitcoin has a certainly good future. David, so to answer your question, you're asking about Unbolted's withdrawal. I don't think they have an exit feature on all of their loans, but they do on, I think it's the business, if I remember correctly, the business lines or the business loans, that they have a secondary market. So I have no idea, because I don't own too many of those loans. I don't know that. I've never had anybody email me and say that they've tried to exit out or had any success exiting out. So I don't imagine there's a very active market. But again, I'm just making assumptions there. Chica Boy says he found out that 88% of the world's money and property is owned by men. Is that true? I'm all about equality, women's rights. And That's a shame if that's the case. I would think married couples own property together, but who knows? Yeah, John, that's exactly right. So they do have a secondary market, but I've never really seen any action with it. So I would imagine not too many people requesting. Mike says the CVA relates to Wellesley Finance. Wellesley Co is merely the peer-to-peer subsidiary. There are many parts to the group. Yeah, thank you for correcting me on that. You're right. I just say Wellesley Co. Wellesley Finance is the umbrella company. AccuChap, yes, I did. I did find out the name of the new peer-to-peer company I mentioned last week. If you want to look into it, you can. But I'm not gonna mention the name this week. But next week, I promise I'll tell you what the company is because I'm still doing research. Agam says Wellesley Mini Bond Series 3 likely return 1p. That's really bad news. Patty says they'll stick to property rentals. So far, so good for me. Yeah, property's good if you got the cash and you don't mind taking some risk for the loans. Patty, you sound like a pretty astute investor. Yeah, Mike, I've been through the property partner update. Showed it. Let's see. I've been painting again. No, I've not been painting. I have. Oh, it's just the lights at the back. I went kind of pink this week. Thank you for the teeth. I do have nice teeth. Thank you. If you want good teeth, I highly recommend, sometimes I give these tips here, Wellesley salt toothpaste. So I've been using this toothpaste for many, many, many years, and it's a very weird toothpaste. I'm gonna give you search from. I'm kind of into health, and I try to keep an eye out on things that I think are going to kill me. And I suspect that fluoride is not a good thing to be putting in your body. So in an effort to find more natural toothpaste, I was kind of concerned too, because growing up in England, you hear about fluoride and all the fluoride's been put in the water to help you. And I'd done a lot of research on fluoride, and I was a little bit afraid to try toothpaste without fluoride years ago because I thought I'm going to have teeth problems. I'm going to get fillings. I know it's going to happen. So the funny thing is, when I was using things like Colgate, I was having a lot of problems with my teeth. Every time I would go to the dentist, they would inevitably tell me, you've got a hole in your tooth, a cavity. I was just having all these issues. So I switched over to this Wellesley salt toothpaste it's got to be 5 years I've been using it. And I swear I've not had one cavity, one filling since then. My teeth feel cleaner. They're whiter. It doesn't have any fluoride in it. It doesn't foam, so it doesn't have the SLS. I think the sorrel sulfate, whatever, the stuff that makes your mouth foam up, you think is good for you is not. And now my teeth are just, every time I go, my dentist says, oh, you have good teeth. What are you using? And I tell him, and he looks at me crazy when I tell him about this salt toothpaste. So apparently salt is a natural disinfectant for your mouth. It does just as much as fluoride supposedly does. And I'm not sure fluoride does anything. But yeah, if you want to try some different toothpaste. Now, I do warn you, the taste it'll take you a little bit to get used to when you first try it. You think, oh God, it's not minty fresh. But give it a couple of days. You're going to love this toothpaste. I promise you'll never go back to regular toothpaste. That's my health tip of the day for you. Thank you, Norman. You're right. Marcus is going down to 0.7%, not 0.75%. You guys are very paying good attention this week. It's impressive. I like how you pick up on my mistakes. Hey, Aki, people in England can have nice teeth too if they, use the right toothpaste. Mike says, Mike Powell had one of my property partner properties option to sell, won't even make 1% profit. Capital loss offset by dividends. Yeah, unfortunately, if they tried to sell now, it's just not a particularly good time to be selling, but that was part of the risk of property partner. It was forward looking, but you did get some dividends, not necessarily capital appreciation. AccuChap says Tesla sneaking back up. Yes, yes, they are. Tesla was one of the companies that I bunged a little bit of cash in. On the trading 212 account. If you're interested in what I built this portfolio out of, Tesla was one of them. I'll put up the video soon. It's up about 16% since I bought it, which I don't know. It's a bit crazy. Market's on a bit of a run at the moment. But here's the truth about stocks. Nobody knows whether it's going to go up, down, or sideways. One of my favorite quotes from the Wolf of Wall Street film. If you haven't seen it, don't watch it with your kids. But I can't remember his name, but the actor in that who says that nobody knows whether stocks are going up, down, sideways. Perfectly true. Seeing it right now with the stock market. Yes, Tesla is sneaking back up. I think Tesla probably has a really bright future. Wall Street may not know it right now, so yeah. Scott says he's a true admirer of women. I think we should admire everybody, right? Everybody that's good in the world, we should admire, not those that don't. Yes, thank you again. Please hit that thumbs up, as Cheeky Boy says. I do try to make people happy with my wisdom and knowledge. Sometimes, yeah, sometimes. I do try to make you happy. Next week, I'm going to have a joke for you. Make you happy. Hi, Richard Weber. Nice to see you. Glad you're here, even though you're a little bit late. You might have to watch the recap. Patty, what precipitated my move from the US to the UK? Well, Patty, I'm actually I'm a Brit, so it's more of what precipitated my move. Oh, you're asking me. Well, when I came to university in the US many, many years ago, so that was how I put down some roots in the USA and then proceeded to go back and forth. Because I'm a laptop warrior, I can work from anywhere I have an internet connection. I've always sort of been a bit of a traveler, and but I was a bit obsessed with the US when I was young. I used to watch the A-Team and American football, WWF wrestling, and when I came to the US to visit for the first time in 2016, I was just hooked. So I had a very good friend, or I have a very good friend in America. I met him when I was 16 years old. And the short story is that my parents had a timeshare in America. When I came to the timeshare, I met this guy. He was 16, and he had a red Ford Mustang, and he lived in this big mansion in Florida, and he invited me to come stay with him for a few weeks for the summer, the first time I met him. And that's what I thought America was. I thought it was all mansions and fast cars and sunshine and palm trees. And I became a bit enamored with America and American culture. I mean, the weather is definitely a draw. I'm not a big fan of the cold, rainy, dark 4 p.m. nights that we have in England, but I also have a lot of love for the UK. Of course, all of the family being there and me coming back and forth. So I have a love for both countries. Dave says fluoride does yellow your teeth, I believe. Yeah, that's true. You should try that. Try that. Will lead to toothpaste. Look, Mike, I know it's £5 a tube. It's absolutely worth it. You know, your teeth are just vitally important, teeth health. And if you are using fluoride toothpaste, that fluoride is going into your bloodstream. I don't know how much validity it is that they write about fluoride having big, strong connections to brain, you know, Alzheimer's and also cancer. But for £5 a tube, hey, it's £5 a month. A tube lasts a month. It's great toothpaste. It is expensive, but come on, you go out and spend £5 on a ice cream and a cup of coffee. So, you know, this is your long-term health you're talking about. Give it a go. I used to think like that too when I buy this toothpaste. Oh, God, it's so expensive. I don't even know how much a regular tube of toothpaste costs nowadays. What is it, £1.50, £2? So, okay, I pay twice as much. I buy 12 tubes a year for £60 to have good dental health. I would say I would pay double that. I would pay £10, £15 for those tubes of toothpaste. 100% worth it. You're welcome, Chica Boy, no problem. Yeah, I do, you know, health. I know this is a peer-to-peer lending stream, but we do talk about different things sometimes, and health. You know, a couple of things that I do that I am very pragmatic about are green tea powder. I think it's great antioxidant. What else? Shakes, you know, like vegetable shakes with a Vitamix. Just blending all that stuff up together and drinking it. Good fiber. I use this stuff called Unicity fiber, which makes you poo, which is good to keep the system cleaned out. The salt toothpaste. And also, if you're using deodorant with aluminum, as they say in the US, I stopped using that years ago too. And now I use milk of magnesia for a quick spray under the pits. It will not stop you from sweating, which is a good thing because you're supposed to sweat. Aluminium-based products, such as the roll-ons that stop you from sweating, are really bad because they clog you up and they're putting aluminium into your bloodstream, which is not healthy. But you can use milk of magnesia. It's the stuff that I think it's for laxative, but you just put it in a little spray bottle and spray it under your arms, and you will sweat, which you're supposed to sweat. That's a good thing, but it will not make you smell bad. So you'll smell absolutely fine. So those are my tips for the day on health. Aki says his Colgate is 59p. That is so cheap. Yeah, but I wonder, you know, there's a stereotype about English people having bad teeth, right? Is that because of the toothpaste that we are suggested to use by dentists? I don't know if that's true or not, but could be. AkiChap says, is it cheap to rent property over in Florida for the winter time? Well, it is at the moment because people are not traveling. But normally, yeah, it's not too bad. You can rent a place for probably about $2,000 a month, $2,500 a month. You probably get it for a lot less than that at the moment. Paul says, thumbs up for Wellesley salt toothpaste. Paul, have you tried it before? You should. Yeah, I agree with that too, Dave. Definitely fluoride in the water. There's a lot of things that we're told when we're young that I think turned out to be completely false. One of them is milk Two, you know how there's this big advertising campaign about milk being good for your bones? In America, they used to have a campaign, milk, it does the body good. And what I have come to learn about milk is that it's actually not very good for your bones at all. And the only time I ever broke a bone was when I fell out of a golf cart that my lovely dad was driving down a pathway and decided to make a quick right turn because somebody almost hit him. And I came flying out of the side of the golf cart here in Florida and landed on the old wrist, which fractured. And it was the only time that I've ever fractured my bones, but I was drinking a ton of milk, and I started to research about bone strength. And what I found out is that milk is actually very acidic, and acid breaks down bone strength. So this whole thing about calcium, in the milk being good for your bones, calcium really doesn't have a lot of content in milk. I think the percentage is maybe 15% calcium in a cup of milk of what you need for your daily value. And also with that milk being acidic, it's breaking down the bone strength. About 4 years ago, I was walking down the stairs in my house and I just kind of tripped and missed the last step and fell right on that bad wrist that I had fractured many, many years ago, and I didn't break. And I think, sure, it could have been a coincidence and luck, but I think that because I was not drinking milk, I had cut it out of my diet, that I didn't break that wrist again. So there you go. But yeah, you'd have to give up ice cream unless you could do, if you were giving up milk, you could do frozen yogurt. So yeah, anyway, that's it for this week. Going to wrap it up. Thank you, everybody, for being here. Appreciate you all spending your time with me for an hour and 12 minutes of chat about financial pit-to-pit and teeth and other things. So I hope you enjoyed it. Please, again, hit that thumbs up. If you missed the stream, you can watch the replay. And we'll see you all next week. Have a great evening. Be safe. Be well. Keep coronavirus free. And we'll speak to you soon. Take care. Bye.